companies that were doing extremely well during the bull market while we was going up. Who was doing well? That's the first indicator. Who was doing well during that time frame? Who is still doing well, but of course they're having a dial back, right? And who has a lot of cash on hand? Those are my first things. First three things. First, number one, who was doing well in the bull market? Was Apple doing well in the bull market? Was Google doing well in the bull market? Was Microsoft doing well in the bull market? Was Berkshire Hathaway doing well in the bull market?
Right.
So, but anyway, besides that point, they did well during the bull market. All those companies had very good years during the bull market. General Electric didn't do well. Ford didn't do well. JetBlue, those companies, they were struggling when everybody was doing well. So now that the struggle is here, how do you think those people are going to perform? Probably not so well, right? So my first look, the first thing I'm going to look at is who did well. All those did well. Next thing is who has dropped, who were doing well, still doing well, but who has dropped during this time frame. Apple has dropped. Google has dropped. Berkshire Hathaway has dropped. Microsoft has dropped. So all of those companies have dropped. Okay, cool. That follows my second stand. The third stand is now that these companies have dropped, who has the most cash on hand? Why do you think cash on hand is so important? I want to know who's probably going to make it through the other side, right? People are saying, okay, these companies did this. Who's going to make it to the other side? I think that Apple, companies that have a hundred billion or more sitting in cash or short-term investments, who has 100 billion or more sitting in cash and short-term investments? The top four I got: Apple sitting at 245 billion, Google over 120 billion, Berkshire Hathaway 125 billion, Microsoft 130 billion. With all these, so these are companies that did extremely well, was doing extremely well before the virus came along. The virus has slowed their business down, and now they have a whole bunch of cash on hand. Now I know these companies. I know Apple at one time. Apple was trading for $700 per share before the 2014 stock split. Now it's at like $250. That's a buy, right? I think the stock is worth $300 to $400 just based off of his books. So guess what? Do I think I need to buy it right now? I think I'm gonna get even better price. I think Apple has some more dropping to do. Why? Apple just announced they're gonna shut down their stores for 2 weeks. If you shut down your stores, guess what you don't make? You don't make money. If you don't make money, that's going to affect your earnings report. If that affects your earnings report, that means you're going to drop some more in the future anyway. So Apple buy zone. That's my simple reason for Apple is a buy. Apple it's a $1 trillion company, has hundreds of millions sitting in cash. So I think it's going to make it all to the other side very easy. By summer of next year, we're going to be hitting all-time highs. But in between time, I would say by the latest summer next year, we'll have all this cleared up. Presidential election will be over. We'll start to run back up. I get it, right? Now, um, now we have to look at who else is doing well. So, do I think Apple will make it? Yes. Do I think Microsoft will make it? Yes. Why? Another reason why I like Apple and Microsoft, they pay dividends. They pay dividends. So that means that while we're trying to get everything correct, I'm gonna collect the dividend. Yes, all my Apple stock are down right now. My Microsoft is down right now. But guess what's currently happening every 3 months? I get a dividend. And then as they go lower, I'm gonna buy some more, right? Because I can bet your bottom dollar. Look on Friday. What industry shot up the most on Friday? Technology. When all of this corona clears up and we figure it out and everybody calms down and the market kind of gets to chewing, the train get back on the track and people start going on cruises again. I just had postponed my event I was supposed to be at this week. I was supposed to be at a school today and yesterday. Children's Financial Literacy Day didn't happen. I postponed it. I postponed pretty much. I was supposed to be in DC at a Boys and Girls Club. I was supposed to be at DC at a school on Fort Meade. All that's postponed. The Boys and Girls Clubs are postponed. Everything is postponed for April because schools are out anyway. So I can't move. I can't do everything. So guess what? When we get back on the track, once we figure this out, once we control it, everybody calms down. The NBA starts back up, the NFL. When we get back on that track and we start to turn our profits back around, you know the market is going to shoot past 30,000 points. We know that. But in the meanwhile, what can I do? What's some things I can get on sale? Those are the companies. Apple pays a dividend. Microsoft pays a dividend. Berkshire and Google don't pay a dividend. Alphabet don't pay dividends. So these are big companies that did well when we were doing well. Amazon could be thrown on there too. So uh, those are the things. So now I'm gonna get into some questions. Before next, we're gonna get into